The correct approach to pricing in your business is focused on meeting your business objectives. Your business objectives must include meeting two main financial outcomes. In this video, I'm going to talk to you about what those two main financial outcomes are, the 5 things you need to consider before you set a price on your products or services. And lastly, I'm going to share a very cool, free online calculator which will take a lot of the heavy lifting out, calculator put to one side, and it will give you a range of options and possibilities which will liberate and power up your pricing approach. Hi folks, welcome to another weekly episode on I Hate Numbers, the channel that's there to improve your financial awareness, improve your money mindset, help you and your business make more profit, save tax and time. What a superb combination we have there. Let's crack on with the video. Remember folks, don't forget to smash that subscribe button as they call it, and make sure you don't miss out on any weekly episodes on I Hate Numbers. I talked about financial objectives, afraid of making money in our business. Let's put those pound notes down. 2 main financial objectives you must meet when you're pricing is number 1, you must aim to recoup the costs of running your business. So whether you are a solopreneur working from home, you will have costs associated with running your business, from software costs, from subscriptions that you have, from freelancers that you're hiring out, from information from publications. They will be there. If you're office based, if your business is a larger unit, you will have rental costs, you'll have spatial costs, salaries and the like. All businesses from the humble market trader upwards will have running costs connected to their business. The second most critical financial objective is you must make a profit out of your pricing. Profit is ultimately the thing that will sustain your business, help it develop and help it grow, and make sure you're there to deliver your why to your customer. What's the 5 things that we need to consider when we set a price? Now, you may not price based on time, but time is a consideration. One thing you need to take into account is what's the available time that you have? What's your capacity? Secondly, you need to consider how much of that time is going to be spent on actually delivering your service to your end customer. Some time will be taken up with support costs, marketing, working in the business, developing the business. Not all of that will necessarily equate to time that can be used to deliver the service directly to your customer. So if I imagine myself with a 40-hour typical week, of which 10 hours I estimate will be spent on administration, support functions, marketing, networking, and all the rest of it, that gives me 30 hours. That's our first 2 key numbers: time availability and how much time will be spent directly supporting the business and how much by nature will be spent on delivering that service. The next thing I need to consider is over a given year, you then need to consider how many weeks that you will have available in a given year. You can go from 0 up to 52. 52 is not recommended, by the way, because you are not a robot. You need time to recuperate, to regenerate, respite, and to recharge those batteries. The next 2 key things we need to discover and we need to calculate and get a handle on is what our anticipated running costs are. So what will be the cost that we expect on rental, salaries, or on equipment purchases? And the next thing we need to consider is what's the level of profit that we wish to make from our business. Now, you need to get to grips with profitability. Profit is the thing that keeps the wheels turning of your business, and it's essential for prosperity, for keeping still, and for you to be able to sustain yourself and deliver your why to your customers. So with those 5 factors, folks, we've got the time we have available, the time we're going to spend in terms of supporting, marketing and administration, how many weeks we've got available in a year, what our expected anticipated costs will be, and the target profit. Now what we've got to do is to blend all those together. So join me, folks, while we go through a wonderful free online calculator tool. Let's check out the free online business calculators. Go onto the website, I'll leave a link in the show notes. Go to the resources page, you'll see free online business calculators there. If you prefer the visuals, scroll down the page and select pricing your services. Having selected pricing your services, we've got a screen that will appear there which will make it very user friendly and intuitive for you to use. Now what I've done there as an arbitrary thing, I've just put an individual, a business that's collectively got 1 hour available in the week. They're going to work 1 week in that year, and all that time is chargeable. No admin, no support work. They've estimated the support costs on 926, and they don't want to make any profit. So obviously on that basis, they need to charge 926 in order to recoup their running costs. Their aspirations are not to make any profit, and therefore that's the hourly rate they will charge. Nice work if you can get it. Now folks, that's not realistic, so let's just play around with the numbers, and this is for you to explore and relate it to your own business. So if we imagine a business individually or with its collective hours, it's got 50 hours to spend in a week. As you can see, the magic of the calculator will work these figures out for you. No need to grab a sheet of paper, grab a spreadsheet or a sheet of paper and a pen. Let's assume in that 50 hours that we've got 40 hours worth of chargeable time. 10 hours will be spent on support, marketing, working on the business. Let's assume we decide to work 40 weeks in that year, and as you can see, automatically the hourly rates will work out the figure there. So what we're saying is on that basis here, with 50 hours available in a week, 40 hours of that are delivering the services, 40 weeks in a year, an annual running cost of 926, then, and no profit, that's what the hourly rate should be. Now, let's add a little bit more in terms of the numbers. So we'll add about 10,000 worth of costs. As we can see, as one would expect, the hourly rate we've got to charge to recoup those costs is now going up to $6.29. Obviously, we'd like to make profit in our business, and our objectives is to make just over 20,000. As we can see, that first number, that $6.29, represents the rate just to recoup the costs, recouping all the overhead costs of the business. And if we wish to make that profit based on those numbers, it's going to be $18.85. And the beauty and the power of the calculator is as follows. If we decide our profit aspirations go up, we can see automatically as a bare minimum what our hourly rate is going to be. Now, depending on the nature of the industry, depending on the nature of your sector, depending on how you want to approach your pricing, you may wish to play around with some objectives and say, actually, my next level of investment, I'm going to spend more money in terms of marketing, I'm going to spend more money in terms of recruiting, maybe some freelancers. So let's put those costs up to 20,000. My chargeable time is 40, 10 hours a week. I can make some efficiency savings, so I'm going to have a bit more time available. And as we can see, by playing around with this, the rates will also alter and reflect that automatically. In future episodes, I'm going to explore mechanisms how you can do this, but effectively, this is an essential framework for you to understand and pitch and get a grip with those key financial numbers. Folks, I hope you found that useful. Be my guest, play around with the calculator, adapt it to your own circumstances. There are some links in the show notes for more resources. And as a reminder here, annual running costs typically are the overheads of your business. If you are a solopreneur, your target profit is what you need to draw out the business to compensate yourself. Make sure you factor that time element in there. Hope you found this useful. I'd love it if you could share some feedback. If there are those in your circle who could benefit with the power of this calculator, the power of this video, then please do share. If there are topics that you'd like explored in future videos, then by all means drop me a line. Until then, happy calculating.